Welcome to TradeTheNBA.com. This is John. This report is for the 9th of August. And what an interesting day. The other day was all the way up to the 100%. Not a shock there with declining 100%, finally reaching that plateau level. But right as we get to the peak, the selling came in and we literally moved right back to that status quo point, but started to see the breakdown, which is barely over that 33 with the magenta now below yellow on the NBI reading. We have blue below the gray. The only thing we're not seeing is a spike up of white, which would need to be over the 4 level to see any kind of breakdown below the 76%. And we still have strong rise in gold and the shakeout still in decent condition. So looks to be more of that malaise setup overall. We're seeing mimic readings here from a NASDAQ standpoint, a little bit stronger from its DOC because it's more of a flat line consideration. So a little bit of softening, the potential for it to start breaking down a little bit, but not a full trigger. Again, flat line for the euro at this particular stage, which is very optimistic given what we keep seeing coming out of the EU. Gold returning back over that 50% range, and we would expect that to continue higher, but obviously it's a concern because you would need to see oil, in this case, continuing to rise in order for gold to really suggest that it's seeing stronger rate of inflation increase. And it's still an elevated price, and that still leads to overall problems from an economic standpoint, but less critical than it had been. And I think some of that was the beginning of the softening of those EU sanctions that literally happened behind the scenes, but nonetheless we reported on, and they took place, and they made a difference significantly. As from a TLT standpoint, again, people flocking back into treasuries, lowering the yield, which makes no sense given the fact that the Fed has promised to increase rates. The market's still not believing the Fed, which is kind of an interesting one when they believed them 100% when it came to the quantitative easing part. I think the market just really is desperate to have easing going back. And we talked about some of the justifications for that the other day about labor participation and some of those other signs of multiple job holders amongst full-time employees rather than massive gains in general employment. So it's just a question of are the numbers that we're seeing massaged, and is the market seeing through that and still suggesting that there's weakness that will force the Fed's hand. Time will play that one out, but simple enough for us. We just keep following the readings. Bitcoin, after its nice bounce, of course, positive extremes coming through there. It's filled back all but the lead move on the positive extreme. Not a surprise there. From an ES5K, we had that decline, a little bit of return, but still presenting a little bit of weakness here with this pivot under the 25 level. So I think we could see some additional move lower. What was beautiful about the day, though, is we started off, and this is what I always point to. So the first positive extreme actually happened right here. Then we went into a yellow, which is right in between, and then we returned back to them with another yellow, but the primary move started right around that 4140, which was the next lead of the positive extremes after that. And then we ended up with a series of them. You know how I've mentioned that I like to see that series of at least 3 there. That's really strong from an algo standpoint. So the whole rise going back through, looking positive, creating even more positive extremes going through. So it's just a question of, you can mark all these lines in between, and then it's just waiting for the trigger. Now it started early, right over here, with rather poor DOC, because typically on a run with this kind of magnitude, you would expect to see a DOC red that's well over the 7 or somewhere in between there, but this was right near the 0 line as we started to get our DOC spread, and then they started to keep multiplying, and you get this kind of a beautiful situation where it starts out positive, then the red takes the lead, it holds on a little bit, and then the white starts to pop up, and as it does that, you can see that the weakness was growing from earlier, and then it compounds itself as white takes the lead, and then you get the pivot below 25 range, and that led to the cascade, and there's that magic 4140 that filled it up, plus the other miscellaneous positive extremes that were right before the yellow and that's where we ended up with the dip that took us all the way back to that original positive extreme that began it all. And you can see how beautiful that fills in and just becomes great markers for the value return. That's exactly what the extreme histogram was supposed to do, and did exactly that perfectly. So that was, in fact, quite nice. I'll go back to the beginning of that, because that really is exactly what we're looking for from that standpoint. You know, that first positive extreme taking place, the low there was 32, and then to see the market come and actually move right back to the previous one, which was at the 30 range, before starting to build just a little bit before end of day. A little short covering, take the gains on that nice move, and we're in a little bit of a mixed blah. So I think it's important to recognize that, and that's why I always keep that on the chart, because it's such a significant player in allowing for risk-reward management, as well as escalation, because if you know there's still further ones to go, whether you're taking partial profits, looking for one of those brief bounces that take place within the broader short configuration, and then have weight leading, becomes an opportunity to attack and create a very specific construct as to what your risk to reward is going to be. So I think that's just super effective, and it's always great to point those out when the market does it for us so cleanly, and getting a lot of very nice intraday action, even if the daily isn't really moving much. Intraday, you can see these ranges are quite spectacular, I think, just from a movement standpoint, because we were all the way at 41.85 to drop all the way back down to the 41.30s intraday. So the day looks pretty much nominal, but we can tell that there was quite a bit going on behind the scenes there. And I think that lends itself to the potential for significant breaks, particularly if you find a support area, and if we see the daily readings start to really present themselves with significant sell signal, that could be far more severe decline within that. So we definitely want to pay attention to that and be cognizant of stops and prepared to flip to a longer term short situation. But intraday, maintaining that flexibility is certainly the course of action with these readings. As always though, trade well. Talk to you later. See you on the Skype chat.